Everyone knows that audit accuracy is dependent on better data analytics. But how can blockchain and blockchain-based audits help that process forward? This is the Issues Watch podcast. Welcome back to the NJCPA Issues Watch podcast. I'm your host for everything technology related, Sean Steinsmith. And I'm thrilled to be joined today by a friend, colleague, and an OG in the crypto accounting world, Jeremy Nau. And I hope I got your name right, Jeremy. He's a partner and a founding member at the network firm, and he executed the first Merkle Tree proof of reserves engagement by a CPA firm. And as I mentioned, he's an OG in this field. I always try to read everything he posts, everything he's co-authoring, working on. So I'm really amped to have you here on the podcast today, Jeremy. Welcome to the show.
Thanks for the very nice introduction, Dr. Sean. Very happy to be here and talk about the subject matter that I enjoy most.
Awesome stuff, Jeremy. And so I'm going to dive directly into this, right? Because there has been quite a bit going on in the tokenized asset space, going all the way back to the approval of those spot Bitcoin ETFs back in January. And as we have larger institutions, be it asset managers, pension funds, college endowments possibly, and the whole TradFi space entering into crypto in a big way, how do we make sure that all of the information coming out of these products and firms is accurate? And so that's where really I want to pick your brain today. How can blockchain-based audits or blockchain overall, right, help auditors and tax analysts and other market analysts, you produce better data and have that data more transparent?
Yeah, I mean, what's interesting about blockchains in the accounting profession, and I think most people don't know this, is what blockchains really are at their core is that they're accounting ledgers. If you literally go to the blockchains, you look on an Explorer, and you'll see it's literally just a debiting and crediting of different accounts on this new type of ledger, right? So what's interesting about these ledgers, though, and some vary with reliability compared to others, but I would argue Bitcoin is actually probably the most secure accounting ledger, perhaps in all of human history, with all the energy and miners backing the whole system. So when we talk about good, better, relevant, and reliable data, typically when you're looking at blockchains, they have the potential to produce the most relevant and reliable data out there, right? Of course, it's going to scale between Bitcoin with all the hash power and the energy behind it versus some small new chain that, at the end of the day can probably be controlled by a couple of different parties. Of course, the relevance and reliability for those chains is not going to be the same as Bitcoin, but chains with sufficient backing behind it, with power behind it, or proof of stake mechanisms that can secure the different ledger entries on the accounting ledger, they can produce the best, most accurate, relevant, and reliable data out there.
Mm-hmm. And so to add some extra background there for the audience, Jeremy, could you please define for us proof of work and proof of stake?
Yeah, so proof of work, it's referring to work or the energy behind a different blockchain. And they refer to proof of work and proof of stake as consensus mechanisms. It's essentially how these blockchains come to agreement across all of the different nodes and users of the blockchain throughout the world, right? So proof of work is referring to the energy work that the miners perform to confirm blocks that include batches of transactions that are appended or added to the blockchain, right? That's the work. Now, the other most popular consensus mechanism is proof of stake, right? Where instead of miners providing hash power to the network, there are token holders that stake their tokens. They have a financial interest and they stake to basically say, hey, we believe that this block or this information is true and accurate. Now, if they lie, or if there is a certain amount of people that don't come to consensus, you're at the risk of losing your stake, right? So you have this financial interest. Back on the proof of work side, those miners also have a financial interest as well, because if they are mining fake blocks that no one else is going to mine, or fake transactions, right, their block is not going to get added to the chain and they're not going to earn their rewards. So it's key to make sure that the financial incentives are aligned for these systems to ensure relevant and reliable data.
So it's not so much different from any other data management or sharing mechanism, in that every member has to have the right incentives to then benefit themselves and to help maintain the integrity of that data.
Yep, it's essentially a control, right, to
Mhm.
adding information to your accounting ledger.
Well said. And so there has been, uh, quite a bit of conversation, controversy, debate over how to audit blockchain-based data, right? And there are any number of institutions out there, be it Tether, Binance, that have had questions asked over basically, are their financial statements accurate? And I can recall going back probably to 2021 or so, the first time that I heard about this concept of proof of reserves. And at the time, I thought that, it's an excellent premise, good idea, not perfect by itself, but an excellent first step to trying to sort of update and upgrade audit processes for a tokenized asset world. And so obviously you're one of the, I would say, handful of experts on this topic. You've co-authored multiple white papers, done it before in the field. And so in a sort of understandable sort of thoughtlet, what is proof of uh, reserves?
Yeah, it's a loaded question these days, actually, too, because the definition keeps changing and expanding. But what proof of reserves is really a reconciliation between customer liabilities, what's owed to customers, and customer assets held on behalf of those customers. Now, that takes different shapes and forms depending on the type of issuer or entity that you're trying to perform a proof of reserves on. So, for example, an exchange, right? There's two sides of the equation. There's the liabilities that they owe to customers. So those are your account balances, right? When you log into Coinbase or your favorite exchange, right? You log in and you say, hey, Dr. Schonstein Smith has 100 Bitcoin. You're doing very well. They have 100 liabilities, 100 Bitcoin liabilities owed to you. Now, on the backside, right, they should be holding those assets on your behalf. But it's not as simple as one might think, right? Because there's commingling of funds between all customers. Typically, they call it an omnibus structure. It's not, a huge issue, right, for operational and efficiency purposes. So that situation, right, you need to look at in the aggregate, when you sum up all the liabilities out to customers and all the assets held in custody on behalf of those customers, are there sufficient reserves to cover all of those liabilities? Now that's for an exchange. But the definition has really been expanded over the last couple of years, and it's been applied to stablecoins or tokenized assets, right? And the same concept of asset liability matching still exists. So if you think about a stablecoin, what is a stablecoin? A stablecoin is an IOU issued on a blockchain, right? So if you hold Tether or USDC, right, you're going to have 1 unit of USDC. And the promise is that when you go back to Circle or the issuer, right, you will burn that token and you will be able to redeem for that underlying dollar. So a proof of reserves in this case, right, is, hey, do you have enough assets or dollars or, short-term treasuries to cover all those tokenized liabilities issued and outstanding to all customers? And you can take that concept, you can apply it to tokenized gold, tokenized real estate, if you will, but that concept of asset liability matching is the key for proof of reserves.
So for our audience members who might not be as immersed in the tokenized asset world, Jeremy, that kind of sounds pretty straightforward. So then why has it taken so long to evolve? There have been multiple white papers. There have been pointed uh, attacks on this idea. And so why has it been so hard to apply a seemingly basic auditing practice to the tokenized asset world.
Yeah, I mean, in particular for tokenized assets, I think part of it is the accounting profession, right? Not diving in and understanding this technology, not realizing that this is just an innovation in blockchain ledgers, right? And of course, digital assets and crypto it's been politicized for lack of, just being forthright about it. So there's been a lot of reticence for those getting into the space. Additionally, a lot of these companies are global or they're startups, right? And they might not go seek out, hey, I don't have to do this, so I'm not going to do this. But from our perspective, like the accounting profession certainly should, and they have been dipping their toes in proof of reserves for tokenized assets. The easiest tokenized asset to prove or to do a proof of reserves or do an attestation over it are stablecoins, right? And that's a very easy way to dip your toe in. You can see the tokens on the blockchain, right? After you get comfort over the chain itself, and you can see the dollars in the bank or the treasuries at a custodian, right? So that's how this started, right? For most firms getting into the space. Now there's yield-bearing stablecoins, tokenized gold projects, and I think more firms, as they get comfortable, will probably start dipping their toes into those as well. Now, proof of reserves for exchanges is definitely more complex because you have to get assurance over completeness and accuracy of the customer database, right? All of those liabilities. But then they might hold hundreds, thousands of tokens, and proving ownership of those tokens and getting data or blockchain balances for all those tokens is a technological challenge, right? That we've had to encounter over the last 7 years. So we've built purpose-built tools, and we're actually offering CPA firms the same tools that we built via LedgerLens, right? So they can get into this space. But that's been a key hurdle, I think, as well, is you do need some tech specs to be able to do the complicated parts of these.
Yep. Well said there. And yeah, absolutely. That I would say that anybody interested in this concept, one, read everything Jeremy writes, talks about, and two, really try to sort of get a handle on how these privately issued stablecoins work on a tokenomics level, right? Because as Jeremy said, that is the easiest way to sort of on ramp yourself into this conversation. So obviously, right there has been progress made. The FASB last year finally issued the first and only so far ASU on this whole ecosystem. So if I had to ask you your top 2 or 3 sort of wish list items to help make crypto accounting and attestation better, clearer, simpler, what are those items?
Yeah, I mean, for me, I think a lot of the work is actually being done behind the scenes, like at organizations like the AICPA. We need criteria, guides, more information to enable practitioners to be able to perform these much needed engagements related to proof of reserves. It's starting with jurisdictions like Texas, Wyoming, Dubai. Canada even refers to proof of reserves in some legislation, right? There is this need and this want for this type of service to ensure that, these exchanges, have had a history, are fully backed, right? And they make that public to give confidence to the marketplace. So I think criteria, number one, for, of course, starting with stable coins, right? But moving to other tokenized assets and ultimately getting to criteria for how to actually approach a proof of reserves for exchanges. I think it's a tall order, tough task, but I think it'll get there. Next, I would say, I don't know if it's a standard or what have you, but I think what would be very nice and what would be beneficial for the profession is we need to get more tech forward. And what's been interesting is that a lot of data now with blockchains are available in, pretty much real time, right? Or Bitcoin updates every 10 minutes, for example. And now we're starting to see banks, right, provide APIs, and we're seeing, accounting systems have API. Almost everything has an API that's tech forward these days. So we need to think about, okay, well, what is the future of this profession going to look like in 5, 10, 20 years? Are we still going to, for these tokenized assets that trade every day that don't have a market close, right? Are they going to get, an annual audit? Or is there something that we can do better, right? More frequent. The data is there, right? But what are the types of engagements that we can do to provide assurance on a more frequent basis?
I am optimistic that all of those items are, to your point, being worked on. Kind of wish they were being worked on faster. Uh, right. But so, and could you tell us how the network firm sort of got started and got up and running, right? Because your entire firm is based around offering blockchain based services in this space, and there aren't too many firms run by CPAs who are doing that. So add some context there, right? How does this whole thing sort of get off the ground, Jeremy?
Yeah, certainly. So, myself, along with a lot of my co-founders, we used to work at a top 20 US accounting firm, and we got our toes wet in the digital asset space about back in 2016. So, we were helping formalize the company's blockchain practice. We would help out on different crypto engagements that came through the door. And we ultimately built a nice big practice there that encompassed 75 different team members across all different service lines, audits, tax, consulting. And we also had a blockchain called Center of Excellence. It was technically structured as a vertical, but we'd help on different engagements across the firm. And after FTX, of course, our firm, everyone took pause, and all other firms, right? They basically had a decision to make. Are we going to keep servicing this space or are we not? So unfortunately, our firm was one that decided that they weren't going to service the space anymore. So we had a decision to make, right? Are we going to go back to our day jobs and go implement ERPs or go join the audit practice or something like that? Or we're going to follow our passion and continue to use our expertise and knowledge that we're going to do what we're going to do. So that was the impetus. We created the network firm. Officially opened doors as of March 1st, 2023. So it's been about 16 months or 18 months now. So it's of course been quite the journey, but we've been able to scale a pretty good practice across audit, outsource accounting, and we specialize in proof of reserves. So we do our best. Of course, we want to be, we might be relatively small compared to the big guys out there, but we want to prove kind of what's possible and what we think this future of this profession can be, right? What are those services of the future? Because I think a lot of people are wondering, with outsource, everyone's getting shipped offshore, AI is coming, PE is coming, and young people are wondering, what is this future going to look like for me? What can I get excited about? And we think that digital assets can be that thing, right? And there's so many opportunities here if we, as a profession, just grab them by the horns and really flesh them out and build them up.
Excellent points there, Jeremy. And, it's a real example to me of how people who are CPAs, even those people who are in the audit side, who aren't always thought of as being always innovative, creative people, for obvious reasons, have the opportunity now, right, based around digital assets or any practice area, right, be it digital assets, be it ESG, cannabis, whatever your passion and area is, there is opportunity out there. And to wrap up our conversation here, and I'm definitely going to have you on again, don't worry. If you had to boil it down, right, for any firm partner, director, firm owner who's on the fence right now as to how to sort of get into digital assets, if you had to give them one concrete step, resource, or action to take as to how to get started, like tomorrow, what is the first step?
Yeah, I mean, the first thing is to come to terms that this is probably going to be here for a while, right? If you just look at, 5 years ago, the maturation of the space compare where it is today. Now it's being talked by presidential candidates. There's a Bitcoin ETF, Citi, BlackRock, all of these different organizations are getting involved. So if you haven't, kind of come to that realization first, I think you should really look into the technology. I recommend starting, with Bitcoin, but then also looking at tokenized assets. Those are the two subjects that I would learn about first. As far as dipping your toes in, right, there's a lot of resources out there. The AI CPAs, issued practice aids. We've published a lot of content. We've actually published a 10-step guide of how to start your practice, right? And part of that is, building up the internal subject matter expertise, building up the fervor internally to the team, and then being able to present to management the opportunities that might be out there for you. But if you're a partner of digital asset and you actually have the potential to make this happen, and you really need some more buy-in, I would say you could take 2 practical steps. One of them would be, first, if you've never messed with or tinkered with a digital asset wallet, cryptocurrencies, right? Go to MetaMask and get some stable coins and send it to your buddy across the world or across the country, and you'll see that it's there within seconds, minutes at the latest, and you'll realize, oh wow, this is really powerful. And 2, ultimately, you'll just have to deep dive or you'll have to take the plunge of accepting an engagement. Now, the idea would be to find a risk-reduced way of accepting an engagement. Maybe don't start with audit or a test, perhaps. You can start with consulting or advisory or tax, right? Those are good ways to get into this. And you just have to dip in and learn and build up your expertise over time. Of course, there's ways to streamline that, and that's what we actually help firms do. Of course, we have our own firm, but we enable you to hire us to help you with your first digital asset engagements, right? So if you sign up a client and you need help, you want to bounce ideas off of, we call it the Ledger Lens hotline. You can give us a ring, and we can talk about the risks, the assertions, completeness, and accuracy, someone that speaks your language, but also someone that understands the space to help you get you moving and feel comfortable to take the big leap.
Well said, Jeremy. And I fully concur that this whole space, be it Bitcoin, tokenized assets, stable coins, is here for the duration. And I think that sooner that we collectively sort of get our hands around this stuff and get hands-on with it, then the better positioned we as individuals and our firms are going to be going forward. Jeremy, it was an absolute pleasure having you on the podcast. Truly a wealth of info here, and I again encourage anybody who's interested in this space, sort of launching a practice, building it out, follow Jeremy and his firm. They're always putting out great content, thought leadership on these topics.
Thanks, Dr. Sean, for having me. Look forward to next time.
Absolutely. and just a few housekeeping notes here. If you have watched through the entire podcast and you are not yet a member of the NJCPA Emerging Technologies Interest Group, please go register at njcpa.org/groups. And every episode of the NJCPA IssuesWatch podcast is available at njcpa.org/podcast and on every major podcast platform. And for more information, content focusing on blockchain, crypto, tokenized assets, please be sure to visit njcpa.org/hub/crypto. Thanks. Have an awesome day.